Welcome, everybody. This is the 5th of October. It's 10 a.m. Central Eastern Time, and we are launching yet another episode of Disruption Talks. I think we're approaching the 50th episode. Usually we start with some introduction that's relevant to what we will be talking about. But of course, yes, we know Facebook, Twitter, WhatsApp outage, everything will steal the attention for the couple of days of the internet. But today, we will be talking about something slightly different. Perhaps we might find some relevant topics, but the focus of today is our guest, Oleg, a digital assets consultant, huge fintech and crypto enthusiast, formerly a team lead of the investment and savings team at Nordea Bank's personal banking division. Hi, Oleg. Great to have you.
Hi, Philip. Thank you for having me.
Absolutely. It's our pleasure. So, I've given you, the typical headline introduction, but I think we owe our audience something from you because you know your story best. So, what are your past experiences, the current role? What brought you to the Oleg that is here today, essentially?
Well, it's been a long journey, but to make that story short, academically, my background is in computer science and economics as my undergrad degree. And for graduate program, I studied international financial analysis at one of Sweden's business schools. Graduated 2 years ago, went to work into traditional financial sector, worked at Nordea, as you mentioned, working with the people's savings and investments in personal banking for the Swedish market until very recently. And currently I work as an independent contractor, still working with people's savings and expanding the portfolio of services with digital assets. I would say that digital assets is my primary focus these days.
I mean, a small side note. I noticed that you mentioned a couple academic institutions in your background. Would you say that they were instrumental to where you are right now, or was it sort of just a habit of you have to go to university in order to progress in life, or could you draw a line that those academic experiences had a direct impact on your career and where you are today?
Well, I would argue that there is no completely useless knowledge. We
Sure.
always will find ways to implement what we learn throughout life, either academically or from our experiences. And of course, I wouldn't be where I am today if it wasn't for the sum total of my previous experiences. And I would say that my academic studies were a big ingredient in that recipe.
Okay. So achieving financial freedom, actually, you became the educator, right? You became the person who elevates people with knowledge in how to manage their finances from personal savings up to hopefully a level where they have, much more than just personal savings. What was the main driver for that? What made you decide that this is how you want to work, help people?
Yeah, well, there were a few things that happened along the path that eventually brought me to play this role of helping people figure out their personal financial situation and maybe acquire a few useful skills how to manage their money more prudently and embark on this journey towards financial freedom and independence. For one, I have worked as an educator for most of my working life. And 6 years ago, I got to teach a group of recent immigrants, refugees, people with tough social background or tough social circumstances in Sweden. And some of the modules that I got to teach them was basics of financial literacy. And already then, I noticed how much I enjoyed talking about those issues. talking about money and talking about personal finance and helping people who had very little in terms of material resources, but a powerful drive to improve their lives, to give them very concrete and practical tools to achieve those goals. Then I myself embarked on the same journey, I would say maybe 7 years ago, when I started doing it with the real intent. I have always had this knack of managing my money well, but it was about 7 years ago when I decided to eventually become financially free. And then the last booster to this rocket was personal discovery of Bitcoin, which for me happened rather late, I would say, in the summer of 2016, when I finally looked into Bitcoin and gave it proper time and attention, and that really accelerated my journey towards that goal of becoming financially free.
So you mentioned Bitcoin in 2016 isn't that late, right? You still right now I would say it's too late, but then again we're going to be saying that in 4 years from now again. So
Absolutely.
um, you mentioned this financial literacy, and you mentioned what's going on with Bitcoin, and I think we are coming from a place of much larger expertise than the average person in the world who's trying to wrap their heads around why there's something called Bitcoin, then there's something called Ethereum. What's the difference between them? What is DeFi? Why did a picture of a monkey NFT just sell for $300,000? What is going on is the completely understandable question in the brain of the average person. And uh, of course, we have this force of all things GameStop, short squeeze, Robinhood, easier access to participation in those markets, and having, by proxy of the access to those markets, some level of understanding that even if you don't have a full grasp of what a short option is, if you participated in the GameStop let's say initiative, there's a high likelihood that you simply had more interaction. You perhaps might not have the knowledge, but you have the familiarity. And the question after this slightly long intro is, what market trends make financial literacy even more important today? On one hand, to try to capitalize on what the markets are offering right now, and on the other hand, to be financially literate to the point that you don't make any stupid decisions, right? That you don't go into that coin that you saw on Reddit, or that you don't invest into something because you saw your friend invest in it. Some abilities to find good occasions, but also protect yourself, because there's a lot of scams just in the ICO world, right? So
Absolutely. Well, you've touched on so many points in this question formulation. So let's unpack it slowly and granularly. Um, when it comes to financial education and why it's maybe more relevant today than ever, on one hand, it's always been a part of human ambition or human desire to improve your life, improve your quality of life, create a better material standard, maybe pass significant wealth further down the next generation of your family, or give back to the world, make a contribution to the society. So these ideas of capital accumulation, building up savings, investing smartly, amplifying your wealth, it's always been around, right? And the recipes of doing that, they are universal throughout time and throughout different places in the world. So we can still use recipes from The Richest Man of Babylon, which is one of my favorite introduction level books on personal financial management, and we can apply them today in the world of fintech and blockchain technology and DeFi, and they will still work because they are based on uh, prudency, self-control, self-mastery, discipline. Well, having stated that, there is, of course, a very special moment in history that we live in. For once, it's much harder for the current generation, millennials and Gen Zs, to build up enough savings or to accumulate enough savings to start investing or to eventually afford having a place of your own. So the recipes that worked pretty well for our parents' generation, which was, let's say, for a middle class where the majority of population was to be found, work hard, work diligently, put some savings aside, have a pension plan, and eventually by the time you reach retirement age, the chance was very high you would own your own place, fully paid, no mortgage left, and you could enjoy a very a very decent quality of life in your later years. For our generation and for the generations coming after us, there is no longer guarantee that we will, prosper by the time we hit retirement age. Maybe we will have to sacrifice more. Maybe we need to work harder. And first and foremost, we need to be smarter what to do with our savings and where to put them. Just to put them aside on a standard savings account that yields you, I don't know, a few percentage points a year is no longer an option because inflation will eat it up. You need to start investing, ideally early in life, and avoiding all those traps that you mentioned, avoiding making stupid decisions. And we can talk a lot about like what are the potential pitfalls, but I would say not making mistakes, first of all, is probably unavoidable, and a certain healthy degree of mistakes making early on is probably necessary to find the right way of doing it and find your own risk tolerance and what is the margin of safety for you when it comes to your personal money. And on the other hand, as with other things in life, it comes to knowing yourself, having mastery over your impulses and instincts, and having a certain plan or discipline in place and sticking to that plan and executing on it and having patience and understanding that it's much better to become rich for certain than to become rich overnight and then maybe lose it all shortly after.
Yes, time in the market, not timing the market. For most people, the statistic is merciless. Unless you are a proper day trader with a Bloomberg terminal and your focus being just on that, it's rather likely that your money 80-90% of the time will go out the window. And well, just to sum up, the asymmetry of downside and upside, I think people were allowed to make inadequate financial decisions long time ago. Right now, they have a much bigger upside in terms of if you learn how to navigate this Rubik's cube mixed with Monopoly of all of those complexities that you have to navigate, and also be able to cut out all of the information noise from the media, from your friends, from everybody trying to give you their opinion. And yes, it's extremely important, just like you mentioned, to have that strategy and stick to it and not be responding to this piece of news or that piece of news, just leaving it alone. And you mentioned this one important trend, the macroeconomic trend, that right now, unlike our previous generations, it's less likely that you would be able to follow the plan of achieving real estate rather quickly and having the ability to stably redirect your finances from a every month rent payment to having your own place and perhaps managing your money differently. So, of course, in such an environment, it's natural that things like buy now, pay later will emerge, right? So this is like a snowball effect of, okay, this is the economic reality. So how can we make sure that those people still have some options? Maybe they won't get a credit card, but hey, buy now, pay later is becoming the ever-present standard. So figuratively speaking, who's to blame here, if there's anybody to blame? Because these are the macroeconomic conditions, and in the face of them, products emerge, right? So is it the financial world that's flooding us with just those all too convenient ways of getting into debts or accessing money, future cash flows, so to say? Is it a bad thing? Is it a good thing? Is it just a thing to be noticed and realized and watched?
Right. Well, like you said yourself, there is really a Rubik's Cube confluence of many different factors, of many different levels, from the broadest macroeconomic perspective, or even the type of monetary system we live in today and have been for the past 50 years. which essentially led to the situation when the wages for the majority of the middle class have been stagnant for 5 decades, while asset prices have increased dramatically in equities and real estate, in commodities and other types of assets. And of course, it also comes to what kind of culture, what kind of values and norms we employ in the Western world. You know, um, this hunt for immediate gratification when everything is instantly delivered, everything is available on demand. You don't need to wait. You don't need to be patient. It all created like socio-psychological ground for tempting people into borrowing from the future to satisfy your desires today. And I would say that goes directly opposite to what many financial educators are preaching, which is live below your means, uh, consume less than what you can afford to, save for the rainy day, invest, prioritize future over present. I would say when I am trying to help people with putting their finances in order, that is probably the most central and essential skill that I try to preach. I tell you have to learn to live below your means. You have to avoid temptations. You have to be humble, modest, and frugal with what you're putting your money into. And you always need to pay yourself first, yourself in the future. Because if you found yourself, broke 10, 20 years later, who's responsible for the fact that your bank account is in double digits and your wallet is empty? It's you today. Or on the other hand, if you find yourself living your best life, enjoying amazing experiences, being a blessing to your family, your loved ones, your local community, engaging in charitable projects, who's to give credit for? Again, among all the people and institutions who help make your life a success, it's also you, by sacrificing but not satisfying every temptation that is out there, saving diligently to be able to enjoy fruits of your labor later in life.
So that sort of crosses out the element of personal responsibility. So we're at the micro level. Then taking a step back, we have two other stakeholders in this game, which are financial companies, financial institutions. They are focused on having, most likely, let's just assume for the sake of simplicity here, the highest volume of turnover of the money that they have from the accounts. So also it's in their best interest to make sure that their customers have more money, that they actually leave with the bank, they go with the institution. Because if you drive your customers out of business, that's not a sustainable business model. And then we have the governments, which should be, in theory at least, looking out for this micro person and not leaving everything on their shoulders. So what would you say is the responsibility on those other two
Right.
stakeholders?
And I would add even a third level or layer to
Okay.
that, and that's central banks.
Okay.
And those guys maybe create an even deeper foundation for how we manage our personal finance than the other two. But let's start with financial institutions. You mentioned, for example, buy now, pay later, uh, and like we stated, those services make it very easy to borrow from the future to satisfy your needs or your desires today. Um, the rate of personal defaults in the Western world is increasing every year. I'm following that statistics for Sweden for a number of years now, and every year it's getting worse and worse. This availability of cheap and accessible credit is really like wreaking havoc in people's lives. Um, of course, consumer protection should be in place And that's the role that the government can play, just ensuring that there are no bad actors, the loan sharks of the modern age, who can really have such destructive effect on people's finance. Um, then the role of financial education is also crucial, and I feel like the public education system is not doing anything on that front to educate our youth on those matters, which is kind of funny because we spent what, at least 10, 12 years in school learning a wide range of subjects that most of them have very little to do with money or personal finance, or nothing at all. Then we graduate, and then most of our waking hours, we're trying to figure out how to get money and what to spend it on
Yeah.
and how to manage it. So the school is not preparing us to face this world and to manage our finance. That's why it's so easy for people, to always chase the latest model of a smartphone, to dream about a fancy car, to get carried away looking at the pictures of dream vacations that your friends or acquaintances are enjoying somewhere as you're browsing Instagram, and you're asking yourself, why shouldn't I do the same things if my peers are doing that? So this confluence of social media, which is often fake, or we should take it with a big grain of salt, and easy access to credit, everything available at a click of a mouse or a touch of a screen. Uh, all of it creates a very dangerous environment for an individual and his or her finances. That's why I said the role of education, the role of consumer protection agencies is becoming ever more important. And then the most macro level of all is what kind of money system we have in place, and if the system incentivizes us to spend as soon as we can, because people are not stupid. People see what is happening with purchasing power of their savings, that every year your money can buy you less than it did when you first received it. So of course people are incentivized to spend their currency rather than save it. And there are no good options for saving anymore. I don't know what interest you can get on your deposit account, but I think across the Western world, it's rarely over 1%. And inflation, especially in the recent months, is trending much higher. So it's also a question of what monetary system the world will employ, or countries or individuals, and that is why the interest for Bitcoin and alternative assets that offer a very different monetary system, going back to the Austrian School of Economics and Ludwig von Mises' ideas on what the money should be. That's why I feel is becoming increasingly relevant, and we will see the importance of this type of money only growing in the near future.
So it's actually not a simple answer, right? Because you cannot say you human are responsible on your own, because we also expect the financial institutions to play somehow in your favor to keep you alive, but also to get as much value as they can squeeze out of you. And then the teacher of the situation, so to say, so the institutions of the government. So it's basically a game of passing the ball between all three stakeholders. No one is to blame at the end of the day. It's everybody's work. So, out of all of those factors that require the presence of all of those three stakeholders, when we think about the fact that crypto, it does play a big part in your strategy of financial independence and helping others achieve that and yourself, uh, what would you say is the potential for good and consequences coming out of Bitcoin when we looked at those stakeholders? How does that change the context if we apply it with not the usual finance that we are used to, but the one that's much more emerging right now?
Right. Well, talking about Bitcoin specifically, it's a deflationary asset. in dollar terms, and it's a money that is inflating slower and slower every 4 years, when the internal inflation denominated in Bitcoin itself is slashed in half. So it is a very sound form of money, just like gold used to be when the world was on the gold standard. So it incentivizes individuals to save for the future, to prioritize future over present. So that could be a game changer. And that's why experiments like El Salvador, giving Bitcoin status of their national currency alongside the American dollar, is so interesting to follow. Um, on a micro level, on the level of households and families and individuals, like how will they make their money when a significant share of their income will come denominated in Bitcoin? Because sooner or later they will realize that the value of that Bitcoin is increasing every year. Of course, it's very volatile, week to week, month to month. But if your investment horizon is at least 3 to 5 years, if you have that patience, if you have that discipline, you will realize that it is a best performing investment asset class. And yeah, we live in a period of great financial upheaval. A lot of disruptive processes are happening. Fintech is challenging the established financial institutions. And actually, fintech companies, now we kind of previously in our conversation, we put all financial institutions in one basket. But I would say that there is a ray of hope coming from many of the modern fintech platforms that actually try to educate their users on managing their money prudently, who are inserting budgeting tools, expense projection tools, automatic savings, automatic investment, robo advisors into their platforms. And I see it as a very like healthy sign that fintechs are often taking the little guy's side and helping ordinary people to put their financial house in order and managing their money better, because like you said, they don't want to be a predator on their customers and rob them blind. They want to build a healthy, sustainable relationship with their customers over longer term, and they're interested in their customers' financial success because they will benefit from it too.
So we have an audience question, and since we're on this topic, it makes sense to throw it in right now. Dominica asks, "How will CBDCs affect crypto, in your opinion?" And CBDCs, those would be central banking digital currencies, if I'm not mistaken. So, Oleg, the question is to you.
Yes. Well, it's a great question, Dominica, and let me try to answer it. I'm definitely not an expert on CBDCs. I'm trying to follow what different countries are doing on that front, and I think it's very hard to predict the consequences of CBDCs becoming available to the general population. I would also say it will depend on the larger regulatory framework in which cryptocurrencies may or may not coexist alongside CBDCs. Uh, and there can be different models of implementing them. It looks like China wants to give their own digital yuan a fast lane, while simultaneously banning all other non-governmental forms of digital currency and digital assets. Um, the West might go a different route. We will see what the US will do, if there will be a Fed coin issued by the Fed, or if one of the currently existing so-called stable coins denominated to the US dollar or pegged to the US dollar will start playing that role. And who knows if it will be USDC or some other stable coin. One sort of very instinctual reaction from cryptocurrency maximalist would be, well, CBDC is not different from the current fiat system, because it will still be the money issued by the state or by the country's central bank. However, I think the reality is much more complex than that. For once, the type of money that we are using every day, they have nothing to do with the money issued by the government of the country or issued by the central bank, because essentially we're just moving, every time we're using electronic forms of payment, we're just moving the private credit institutions credit units, which we, for convenience, denominate in our country currency, just to be able to compare prices of goods and services that we are buying. But it's a very different form of money from the one issued by the state, which currently for most people, or for at least for individuals like you and I, only exist in the form of physical cash, banknotes and coins. So when we suddenly get our notes and coins in digital form as a CBDC, then we will be using the money created by the state, but not by private actors. So that might have very interesting implications on the societal level and for the national economy. I don't dare to make any predictions on that front, how that will play out and what role private banking institutions will play in such a system. On the other hand, just to be a bit more optimistic about coexistence of CBDCs with the cryptocurrencies as we know them today, hopefully it will be easier for people to exchange one form of digital token for another. And maybe if you have a digital wallet on your phone or your fitness tracker or other type of digital device that you have on you, then maybe some of those tokens will be in the form of government issued CBDC. Some other would be a piece of NFT that you would be proud to show to your friends. Another would be loyalty points from your favorite supermarket chain or your favorite cafe. Uh, and other types of cryptocurrency, and all of them will be interchangeable on the fly and much more easy to do and more convenient to do than it is today.
I share your optimism because I don't think that they are enemies. They cannot be enemies because the crypto that is sort of allowed right now is just because regulation hasn't gone as hard as it could, as we see in some of the regions. You mentioned China, for example, and the reason for the simultaneous introduction of the CBDC over there, in parallel with what we're seeing happening to companies, to the Alibaba IPO, to everything where the government basically figured out there's too much power in the hands of non-governmental entities over here. And when they looked at what Alipay and what WePay was doing with simply having their hands on the payment market in that region, they figured this should be state controlled. But outside of that, I see it as something that will either trailblaze or follow the path of current crypto and people trying to push for its mass adoption. Because let's face it, the argument of anonymity, I'm not sure about the stat, but I'm pretty sure it's above 70-80% of people holding crypto don't hold them in cold wallets that aren't connected to anything. They most likely are on an exchange where they most likely had to submit their ID, and there are many things that will link them to this. So stripping the anonymity factor apart, it's much more about all of the economic implications. So I wouldn't say just for that reason that they are enemies. They're much rather perhaps competing who will achieve the same thing first. That's my point of view.
Definitely, I share your viewpoint on this. And like you said, the loss of privacy and anonymity is the darker side of CBDCs, because if those state currencies are issued in a way that lack enough privacy protection for individuals, if all the transaction can be traceable and attributed to your spending patterns, to your digital wallet address that is linked to your identity document, then of course it's a dream of every authoritarian government out there to know exactly where, when, how much, you spend your money on. And maybe there are certain things that the government thinks are not good for you, that you shouldn't be, spending money on tobacco products or certain type of books, or certain trips to certain places within your country or to destinations abroad. Just imagine how quickly you might lose access to your CBDC denominated account in such a system if the government decides that they disapprove of how you're using your money. So that's a really scary future scenario. So, like we mentioned before, in case of cheap consumer credit, Consumer Protection Agency should play a role. There should be advocates for privacy rights and for the right of people to transact in digital cash pretty much the same like we do today. If you and I were to meet in person in a physical location, and I would borrow 20 euro from you in cash, or I would sell you something for 20 euro, the business would be just between you and I. It would be no middleman inserted, no one tracking that transaction between us. And that's why cash is still widely used in many places around the world. The question is still open to which degree the CBDCs will allow this type of transactions between individuals.
Just as a interesting point to share from one of my past interviews, I was speaking with a gentleman from Germany, also very much in the Bitcoin and blockchain, sorry, and crypto space, and I asked about the fact that they are introducing a lot of novelties in terms of fintech and regulation in Germany, and I asked, is it a myth? Is it just an urban legend that cash is still king in Germany, and it's something that is just the main driver of any financial decision? And it was actually shared with me that it's not just about the cash as much as for the fact that if you have a credit card, it's something that's not a popular look, socially speaking, that if you have a credit card, that carries an implication on how you manage your finances. As in, if you have a credit card, you need to have a credit card because you couldn't manage your cash without it. So just an interesting thing when we look at cash heavy societies that haven't, for example, gone as far as the neighboring Poland in terms of adoption of touchless payments. So wrapping up on crypto, still far from mass adoption. It's difficult to have it for fast transactions. It's difficult to have it without a high cost of every transaction compared to the usual finance that we use. So what makes you think that it's a wise path to financial freedom, and how do you convince others to get to know digital assets? One thing that I can think of right now is if I see the trend that's always growing on average and that it's far from mass adoption, simple conclusion. It's good to be early to the game, right? But I'm sure
Exactly.
there's other things you can say.
Well, you exactly pinpointed one part of my answer, which was to say, well, it is attractive because it is so early. We are far from mass adoption. Investing in crypto today would be the same as investing in internet companies in late 90s. Of course, given the fact that maybe there is a cryptocurrency equivalent of a dot-com bubble crash waiting for us around the corner. But those who survived the dot-com crash 20 years ago, they benefited enormously from the adoption of internet and the incredible growth of internet native companies. We'll know those examples, we'll know those names, their household names by now. Uh, so it's definitely appealing to be one of the early investors or early adopters of this technology. On the other hand, I would say the attractiveness of crypto as an investment class is in figuring out your diversification strategy. Of course, even if you observe the fact that this particular asset class is outperforming everything else, and like you said, on average, it's growing year to year, it would still not be the wisest move to put all your eggs in the same crypto basket. But now just the fact that we have a distinctly new uh, asset class that is occasionally correlated with commodities or precious metals, occasionally correlated with the stock market, and has been for over a year and a half now. Sometimes it goes against the grain of the equities, but it is a new asset class. So just as you would like to diversify your portfolio with maybe real estate and bonds and equities and other types of financial products, why not put a few percentage points of your portfolio into crypto? And again, it all comes down to your understanding of what it is you're investing into, how much you know about it, how much you follow the development, and your personal risk tolerance. But I would say one of the most reckless things you can do with your money today is not invest 1% of your savings in cryptocurrency, especially in those that have already proven their staying power, their resilience, such as Bitcoin and Ether. So, well, the worst thing, it all goes to zero. Okay, you lost 1% of the allocation of your overall portfolio. The best case scenario, it 10x in 2 or 3 years. And there are very few other assets that can guarantee such performance. You know
So
this saying, I think it was Dan Hald who tweeted, I invest in Bitcoin because I am risk averse. And I really liked
yeah.
it.
Yeah, and here to counter that with a quote, because I wanted to raise the obvious point that, of course, at the end of the day, follow the money. And if you look at all of the institutions and funds, at first trying to ridicule, then putting their small toe in the swimming pool of cryptocurrencies, and then deciding, okay, maybe let's allocate 10% of our entire portfolio just in case. Visa introducing that as a staple thing, PayPal introducing that as a staple thing. But for example, JP Morgan CEO Jamie Dimon says Bitcoin is fool's gold, and furthermore, it's going to be regulated the hell out of it. So it's always interesting to hear that from such a diverse viewpoint, because you would imagine that all of the largest institutions would be much rather aligned in this. The claim here is that it has no intrinsic value. But then again, what has intrinsic value, right? Does gold have intrinsic value, or did we just appoint it?
Yeah, well, the conversation about intrinsic value of things can easily force us to go over time
Yeah,
for
philosophy
discussion.
talks. Yes.
Exactly. But when it comes to what representatives of large financial institutions are saying publicly, I think there is much more going on behind the scenes, and there is a very different game being played outside of the view of the public view. So what we are being fed in terms of bits of information or sound bites, it might be very different from the actual intent. And I mean, you mentioned some names of large financial institutions. They have been caught red-handed manipulating the markets, manipulating the prices of assets. And since crypto is not regulated to the same degree, it's even easier to manipulate this market. And the size of the market and the liquidity on the exchanges makes it very, a thing that is easy to play with and push the price in whatever direction benefits your institution or even your personal financial interest. One thing Jamie Dimon is not wrong about is, I believe, the degree of regulation of this space that is coming. Again, to compare to the internet, like if you look back at how internet was 20, 25 years ago, it was a wild, wild west, right? It was a very exciting place to be on, but it was a wild place. There was very little protection of your privacy, of consumer rights. And today, internet, especially in the West or in the EU, where you and I are currently based, it's a very tightly regulated place, and which also helped its widespread mainstream adoption. So I think cryptocurrencies and the whole blockchain space will go the same route as regulation tightens. Uh, that powers that be become more relaxed at allowing people access to this technology and this type of assets, and integrating it in their everyday lives and using it just as we use internet on our smartphones today.
Agreed. I think, however we look at solutions from 20 years ago, in 2041, we're going to look with a similar smirk on our faces when we consider that. For example, not everybody's will was created as a smart contract on the blockchain, but much rather kept somewhere as a physical piece of paper that could be lost, damaged, hidden, stolen, anything like that, right? So, definitely a trend to follow. We have a question that's outside of Bitcoin and cryptocurrencies already. Pavel here talks about the real estate investments, if we can offer some advice. Should we expect more decisions, such as in Berlin, where the real estate funds will need to sell off their apartments? And if this scales across the entire of the European Union, how would it change the markets? And just to share some context with everybody watching, a majority in Berlin's election just voted to strip almost 250,000 rentals from major landlords and fight the city's housing crisis. This is a response to large financial institutions like funds going into cities, figuring out, okay, these real estate locations make a lot of sense for our ROI. Let's buy entire buildings, and thus making it difficult slash impossible for the Berliner to just buy their apartment when they're competing against volume funds that probably knew about these real estate investments a little bit earlier than a person just looking for the apartment. So, after this context, back to the question, uh, do we think that it's going to scale across other locations in the European Union? And what will it do to the markets? Will we see some lower temperature perhaps on the prices if it becomes less attractive as an investment and just an apartment to live in?
Well, I'm afraid I'm a wrong person to ask this particular question, since I'm definitely not an expert in real estate, and I haven't been following the recent developments in Berlin. You, Philip, seem to be much more informed about what's happening, and you sort of provided your view. So maybe I could redirect this question back to you, so you could provide your perspective.
Okay.
One thing I would mention very, very briefly, again, circling back to blockchain technology, is maybe fractionalized and tokenized real estate could become part of our portfolios in the near to midterm future, when we don't need to buy an actual real estate property as a physical object, but to buy fractional shares of it in a digital form, and keep it in our digital wallet. So that's where NFTs can truly shine, I believe. So back to you, Philip, on this question.
Thank you for the compliments, but I Google fast and talk confidently, so it's not that I have a large real estate knowledge or a background in this. But uh, in the most layman terms, I also heard about this before. Pavel mentioned this, but essentially, to put it in like bullet points, funds go into a city, eat up large spaces, that drives up the prices. The everyday person doesn't get to enjoy the normal market prices of real estate as they should. And right now, after this vote where the majority backed this initiative, the city government will buy the units owned by corporate landlords to sort of redistribute them at less boiling or frothy prices. So I would say that this is the kind of regulation that makes sense because it's protective of the local society, and you definitely don't want a situation in which the city is entirely owned by corporations and you drive out the people who make up that city. Although obviously it sets a precedent, right? And at some point, if I am on the fund side and I am making such investments, and then all of a sudden my strategy just fails because the city decided to, of course, here it was the society that was voting, right? But at some point, who is to say that the government won't just take that decision for you because they are looking after you and this is for your benefit? So always a two-sided kind of thing. Interesting to see what's going to happen with real estate prices globally, not just locally in our European Union, but everywhere really. So yeah, that's me. I'm also not an expert, but I try. So back to our questions. These are the less technical ones or less techy. These are just generalist questions. A decision making framework. Any tips you can share with other leaders how to go through difficult decisions? In the simplest example, is cake good? Yes. Is cake good for me? Well, not in the amounts that I would like to eat it. So, what's like a rule of thumb that helps you get through difficult decisions or just not waste time?
Well, again, I think different people take different approaches to how they make decisions. Some do lists of pro and contra. Some try to gather all available information before they can decide one way or another. Some just like YOLO, trust in the universe, trust in their guts. For me, I would say it's a balance between my intuition, which I try to trust more, just going by this gut feeling. If there are any red flags that I cannot maybe like articulate, but something kind of triggers those warning bells. And on the other hand, just trying to study the facts, but not to the extent that would lead me to decision making paralysis when I feel like um, I don't have enough information to decide. Of course, we live in a chaotic system. You can never control everything 100%. You might create an illusion of control, but something happens, it gets shattered. It would be a painful lesson. So I would say we're all chaos pilots in this world, like leaves in a hurricane, still trying to find a sense of direction, try to make smart decisions, or at least not to make mistakes too tragic that they would, like destroy us quite literally. I'm afraid there is no universal recipe, and every person on this planet has to figure these things out for herself or himself throughout life.
Yeah, yeah. The most universal one can be always keep your light on and always keep it moving, right?
Yeah.
Um, the last question. I'm giving you remotely a magic wand, and you get to abracadabra so that every 12-year-old in the world suddenly learns a specific thing. You are basically giving the gift of education to every 12-year-old in the world, and we've heard empathy, we've heard design thinking, we've heard coding, we've heard financial prudence. One guest said, stop trying to teach kids anything when they're 12, just let them be kids. There's no right or wrong answer, but there is your answer. So I'd like to hear that. What and why?
Well, what a fun question to think about. I wish I had more time to reflect upon it. But spontaneously, I would say I would like every single 12-year-old on the planet to master a language fluently. It doesn't really matter which language it is, as long as it's the same for everybody, which would create this truly connected global generation of people who can communicate with each other and understand each other, whether it happens online or when people travel and go to places. Because I feel, as an English speaker, now we're using English, you and I, we have this bias when we choose our travel destinations. Maybe we're going to a country where there is a significant proportion of population who speak English, or whether services are offered in English, or the type of media we consume. So there is this inherent bias. At the same time, large regions and big masses of this global population are sort of isolated from our little info bubble just because we don't speak their language. Like, how often do we get sources straight in Chinese or Japanese or Spanish or French? So if we magically could unite humanity around one language, and one attempt that was born about 150 years ago came from Poland, by Dr. Zamenhof, creator of Esperanto. That was a beautiful attempt to solve the situation. So if I had a magic wand, I know which language I would order.
That's a really cool answer. It's very non-typical, non-template, and yeah, like imagine all of the issues that we have right now with getting along, getting together, understanding the other person's point of view, to just situations where you never look at someone else on the street as foreign because there's always that common denominator that you can get them. Really love that answer. um Oleg, we are nearing the end. I don't see any more questions from the audience. I'm curious if there's anything you would like to leave us at the end, or if this is the time to say thank yous, goodbyes, and so on.
Well, if you haven't considered investing in cryptocurrency, at least in Bitcoin, please give it another look. Study it, try to understand it. Just throw 10 euro into it and see how your investment develops over time. Um, Aside from that, it's been an absolute pleasure, Philip. Thank you for hosting this conversation and exchanging our opinions and our views. I've really enjoyed it. Thank you for having me.
Likewise, the pleasure is all ours. And yeah, absolutely. Everybody go and try Bitcoin. And if you have some more questions, uh, Oleg is your guy. Reach out to him on LinkedIn and get yourself educated on your personal finance. So, dear Oleg and dear audience, thank you so much for attending today. As means of an invitation, later today we'll be hosting a Twitter Spaces, and on Thursday, a new series of disruption talks that deals with sustainability. So, see you there. And once again, thank you, Oleg. Thank you, dear audience, and everybody. See you either later today, on Thursday, or on next week's disruption talks. Bye bye.